Okay, next up we have Frontier Energy, ASX code FHE. They have a market cap around 117 million. Frontier Energy is developing the large-scale Bristol Springs Solar Project in the heart of Western Australia. This is the first step towards becoming an integrated clean energy company, including the potential for green hydrogen production. Presenting for the company today is CEO Adam Kiley. Adam, welcome, and please take it away.
Thanks very much, Paul, and thanks for having me today. If we can just move forward to the next slide. And the one after the disclaimer as well, thanks. Everyone should read that. Anyway, thanks very much again for having me. For those that are unfamiliar with Frontier Energy, as has already been mentioned, we're a West Australian-focused renewable energy development company. And our key project, as you'd see on screen now, is the Waroona project, which is located around 100 kilometres south of Perth and has the potential to become one of Australia's largest standalone renewable energy hubs, as we importantly have all key permits, approvals, as well as an established connection to the grid already in place. This is going to see us start construction on stage one of the project in the second half of this year. Stage one of the project will be a 120 megawatt solar facility with an 80 megawatt battery. This size facility, as well as the strategy, was decided upon as it will provide the strongest financial returns, as well as the lowest technical risk for the stage one development. The DFS for stage one is nearing completion and will be released in the next few weeks, so unfortunately I can't say too much about the numbers at the moment, but I'll be more than happy to come back in the next little bit to explain through these numbers in a bit more detail and watch this space on it. Next slide. However, this is only stage one, and for me, this is really only the beginning for the company, because it's really the growth potential that sets us apart from a lot of other companies. With more than 1 gigawatt of energy potential through our established connections, as well as freehold land, as well as the world-class surrounding infrastructure that surrounds the project, that allows us to look at value-added initiatives such as green hydrogen in the future as that market continues to mature. The market conditions for renewable energy are arguably some of the strongest out of any commodity that you'll see in the spectrum at the moment. This is particularly evident in Western Australia, where we currently have the highest priced energy in the country. We believe this is unlikely to change significantly over the coming decade due to decarbonisation targets from both the federal and state governments, grid constraints, which I'll step through in quite a bit more detail later on, as well as increased electricity demand. In addition to this, both the state and federal governments continue to provide new incentives for renewable energy development. A big part of this in Western Australia is the benchmark reserve capacity payment, which is completely unique to Western Australia only, and this payment is going a long way of underpinning the financing for the development of the project in the future. Finally, we're in an extremely strong financial position with around $12 million in the bank today that will see us completely funded through to FID. We're also just about to kick off debt financing. There will be a little bit more information released over this in the next couple of weeks. Next slide. Before I talk a little bit more about the project, I think it's really just worth touching on what is the energy transition. We see it on the front pages of the newspaper all the time at the moment. Simply, it basically means the world is moving away from carbon emission fuel sources towards renewables. This means we're turning off things such as coal and gas, and we're turning on solar as well as wind. In Australia at the moment, we're sitting at about 35% renewables. However, the target is 82% by 2030. So we've got a long way to go to actually catch up to that target. But the way energy goes onto the grid is really only half of the equation. The other half of the equation is the means by which we actually take energy off the grid. This is things such as the evolution of EV vehicles. AEMO's forecasted that over the next decade in Western Australia, energy demand is going to increase by at least 80%, with an upside case of around 220%. This transition is obviously already seeing a huge impact on energy prices across Australia as they've increased markedly over the last couple of years. However, in WA, as I've already mentioned, we already have the highest energy price during the last quarter alone. During the past year, average energy prices were around $90 per megawatt in Western Australia. That's 80% higher than what it was 2 years ago. We're also seeing a similar increase in energy prices from solar, despite there being an increase in PV solar, which is household solar, as well as a huge increase in peaking prices, which now sit at around $140 a megawatt. For those unaware of what peaking prices are, that's basically at 5 o'clock at night to 5 o'clock in the afternoon to 9 o'clock at night. When everyone goes home, renewables are at their lowest and everyone turns everything on. This is the market that we're really looking to capture now from the inclusion of a battery as part of our strategy. Next slide. But why are energy prices in WA, Australia, and rest across the world, why are they going up at the moment? It basically is because the energy transition is not easy, and it's the same constant factors, irrespective of where you are, that seem to be popping up. The first one is the grid. Grids were not built for renewable energy. They were built for coal and gas. Typically, those areas where the grids were originally built for coal and gas, they're now surrounded by towns as well as other industries. Renewables, as we know, need significant land. These significant land areas are obviously only available at the moment in areas where terminals aren't established or the line connections are insignificant. So it's going to take a long time before states and federal government actually builds out these grids to the areas where they can actually be built. Once the grid's been built out, it usually takes us a minimum 6 years then to actually build a renewable energy project. For me, this is really our biggest advantage, as we already have 2 connections in place on the largest section of the grid in Western Australia. This means we're effectively ready to go, as well as when we actually get the project up, it also means that our energy sales will not be curtailed, because which happens in other sections of the grid if they're not on a large part of the line. Secondly, as I've already mentioned, there's a huge supply-demand imbalance at the moment. Basically, what this means is energy demand is increasing at a much quicker rate compared to what supply is coming on. And it's really quite logical if you think of it. I can go out today, I can buy an EV car and I can plug it into the grid. So I'm now increasing demand onto the grid. As I've already mentioned, to build a large-scale renewable energy project, it's a bare minimum of 6 years to actually work through. Our biggest advantage is we've been working on this project now for over 4 years, and we're just about ready to go. As I've mentioned already, the DFS is just about complete, with FID for the project targeted for the middle of this year and first production for the end of 2026. It's forecasted when we bring this project through, that's when energy prices are really going to start kicking into another level. Finally, the other big issue with renewables that everybody knows, renewables are intermittent. What this means is basically the sun doesn't always shine and the wind doesn't always blow. So how are we actually going to use renewables to supply the grid during these times of the day? Well, batteries are really quite a key part of this transition, and it's a part of the government's key transition strategy. It's also completely now part of our strategy as well as we move forward. But a big advantage that we have compared to, let's say, a big battery, the way they work, they draw energy from the grid. When they do that, they have transition losses. They also have additional charges. Our strategy is basically going to be filling the battery during the day when energy prices are the lowest. I'll step through how that's going to work in a little bit more detail later. What this does, it ensures that we're going to have minimal energy losses. It also means we don't have any energy charge on costs as well. And it means that we can select the time of the day that first off, we actually want to be filling the battery up, as well as then discharging that battery later on. Next slide. I've already mentioned the grid, but it really is a massively key point of difference from us compared to anyone else out there. But before stepping through, I suppose, our key advantage, it's really worth highlighting that West Australian grid, which is known as the Swiss, is completely different from the rest of Australia. So the electricity network across the rest of Australia is called the NEM. That's the largest electricity grid in the world. It stretches from far north Queensland all the way down to South Australia. WA is completely isolated, not for the first time, from the rest of the country. Our network is known as the Swiss. The state government's announced plans that they're going to expand the Swiss in the future. This is likely to happen to the north as well as the eastern corridors, where there's lots of land available. But it's unlikely this is going to happen in a significant way between now and 2030. But as I've already mentioned, expanding the grid is one aspect of it. You also have to get that new energy onto that grid at the same time. To go through the various aspects of permits, planning, approval, development, funding, that's a bare minimum 6 years on top of that as well. So we're really looking at a huge energy deficit between now and the next decade. To confirm this, however, we actually did a lot of our own work because we really wanted to make sure that this was verified from, I suppose, another independent source. So we commissioned a group to actually do a review of the Swiss to basically confirm these beliefs for us. From their report, they basically came back, and it actually surprised us on the upside for us, because they highlighted that across the whole of the Swiss, so which is the southwest interconnecting system in Western Australia, we basically have the only project that has the capacity to build a 250 megawatt renewable energy project anytime between now and 2030. So it really does set us completely alone from anyone else from bringing on large energy projects anytime soon. This analysis was completely in line with AEMO, who is the energy regulator in Australia, and their annual ESO report. So the annual ESO report that's released every year around August, and it basically does a forecast for the next decade on what the supply demand is going to be. They forecasted that in Western Australia, there's a huge deficit which is going to be going on for the next decade. So this basically now gives us complete confidence that energy prices are not going to impact our project adversely. And it's actually going to be really quite the upside in our belief that energy prices are likely to keep on increasing. Next slide. So the next slide here, this is actually just talking a little bit more about a battery. So in the past, from a market point of view, we haven't spoken too much about a battery, but a battery's always been something which has been included as part of our strategy. And we've always analysed it. There was a change to reserve capacity payments, which I'll step through in the next slide. But a battery is just complete common sense to have if you've got a solar facility. So if you actually look at the graph, this really explains it really quite simplistically, because the inclusion of a battery allows for a simple arbitrage. So if you have a look at the graph on screen, you can see the orange outline. That's the general solar curve that you get throughout the day. The grey line is the energy price. As expected, as solar increases throughout the day, especially with PV in Western Australia, it's the highest in Australia at 38%, energy prices fall. So the grey line drops down. So if we were going solar only, we're effectively losing money during that time. The inclusion of a battery now, however, that allows us to turn the battery on when solar starts increasing and energy prices start falling. So we now effectively turn off putting energy onto the grid at those low prices. We fully charge the battery during those low price periods. And as the sun comes off and PV diminishes, we now turn that battery on. So when you look at the numbers, so for example, we're now arbitraging. So we're moving from selling energy at around $20 a megawatt up to around $150 a megawatt. So it's very, very simplistic, and it's always been a part of our strategy to include a battery. However, when we look through the next slide, now it doesn't make just complete financial sense from an arbitrage opportunity. It now is completely underpinned from a financial sense point as well. So as I mentioned already, in Western Australia, and again, WA is completely unique on this, we've got a system called the reserve capacity market. What the reserve capacity mechanism is basically AEMO and the West Australian government, they pay energy suppliers $1 per megawatt to have energy available in those in-demand periods. So for example, those unfamiliar with WA and the weather over the last few days, it was over 40 degrees here yesterday. If we were on the grid, everyone who was receiving reserve capacity would have been called upon. I was receiving text messages yesterday, as everyone would have been, from Synergy saying, please consider turning your power off because the grid would have been under a hell of a lot of constraint. Anyway, reserve capacity payments in a bit more detail. The government pays you an annual fixed amount per energy you can bring on. For a battery, there was a big change at the back end of last year because batteries previously weren't included. Batteries are now the benchmark technology moving forward, most notably a 4-hour battery on the section of the grid where we're included. So very simplistically with the numbers, and these are the only numbers I can talk about because they're all public, if we have an 80 megawatt battery and then the reserve capacity payment, which you can see on the graph, that payment has been increasing somewhat exponentially over the last number of years. And when the market is forecasted to be in deficit, as it is for the next decade, there's automatically a 30% increase in that price as well. the government will pay us that amount. So if you do 80 multiplied by $300,000, that's around $24 million a year. The government's going to pay us to have a battery included. On top of that as well, because we got solar, solar comes through at a discount because it's intermittent energy. We forecast that will be a payment of around 10%. So that should add around about another $4 to $5 million per year in the first year of production. So from reserve capacity payments alone, we're expecting that number to be somewhere between around $28 to $30 million a year when we come through with a study in the next little bit. So quite simplistically, when you look at that, that now is completely underpinning the project as we move through. On top of the reserve capacity payments, we've obviously got energy sales. We obviously get solar cells as well as the arbitrage from selling of those peak periods, as well as LGCs. So LGCs, quite simplistically, that's the carbon credit payment that's paid by the government when you produce renewable energy and it goes onto the grid. So we think we've got extremely strong economics, which will be highlighted in the next few weeks as that comes through. The final point I'll just make on reserve capacity payments, why it goes a long way to underpinning debt financing, is you can lock in that dollar amount now for the next 5 years. That can happen today. Because it's going to be a renewable energy project, it's already been highlighted by the West Australian government, that's likely to increase to a 10-year period. So effectively, when we come through and we bid in for the reserve capacity, at some point in the future, we'll be able to bid in, lock in that price. So lock in, say, $28 million over the next 10 years, which increases with inflation as well, which now is going to completely underpin our financing of the project as we move through. Next slide. So just to sum it all off, unfortunately, guys, I can't really go through a lot of the numbers on the DFS, but we're literally 2 to 3 weeks actually away from releasing that now. The second the DFS is announced, we're going to be working straight into debt financing mode. And we've already started work on that in the background already. This is all working towards an FID decision, which is probably going to be about the middle of this year. And then project development is going to start there afterwards, with first production targeted for the end of 2026 or otherwise early 2027. But as I've mentioned before, this is really only stage one. The expansion potential we have at the project to get up to 1 gigawatt of renewable energy, as well as looking at other new industries such as hydrogen, because we've got all of the key attributes for hydrogen production around the project, including pathways to actually use that hydrogen, as well as water available to us already, really puts us in a strong position to actually work in that market in the future. And as I've already mentioned, the market conditions for energy in this state, so across the rest of Australia, I believe are not going to be going down anytime soon, which has obviously happened in a lot of other commodities over the last period. So thanks very much for having us. And Paul, happy to take any questions.
Yeah, thanks, Adam. Great presentation and very clear that Frontier is very well positioned in the energy transition space. That message came through loud and clear, Adam. A question here regarding what funding strategies is the company considering for your solar project?
Yeah, so we solar battery projects, so it's important to highlight they're all part of the same system or network. Basically, we'll be announcing a little bit more about debt financing over the next week or so. And the second that the DFS is released, we basically go into full debt mode there afterwards. I don't really want to say what the split between the two is going to be at the moment, because I want to get a little bit more certainty on that. But there will be a mix of debt and equity. Typically, you find, just to give a little bit more color on debt for renewable projects, you can leverage up higher than usual. We don't want to over leverage by any stretch of the imagination, but we do have that ability there. The other thing with debt with renewable energy projects, so if you're a mining project, for example, you usually have a reserve tail. And banks would usually want their money back within about a 5 or 6 year period if it was a 10-year operation. Renewable energy, again, is really quite different. Speaking to our advisor, the ability to get an extremely long tenor with very low interest rates for this project, very, very likely as well. I don't want to highlight what the numbers would be at the moment, because we want to get complete certainty on it, but I'll be expecting the debt tenor to be well in excess of 15 years with extremely low interest rates as well.
Yeah, gotcha. And just remind us, how important are the WA government changes to reserve capacity, and what other support might the government provide in the future?
Yeah, listen, great question. So as I mentioned before, we've always looked at batteries in the past, but it was really the back end of last year where the changes with reserve capacity and effectively the technology changes came through. So to give a bit more detail on that, going back historically, the way they do the reserve capacity payment is they basically calculate what would be the cost of getting a new energy asset onto the grid. That energy asset historically was a peaking plant, so it's a gas-powered peaking plant. The government announced at the back end of last year that that's now going to be a 4-hour battery working forward. So making that change now allows for a 4-hour battery to receive 100% of those payments. The other change, which wasn't embedded into the $230,000 number, which increases to $300,000 with the deficit, is that batteries cost more than a peaking plant today. So when the government comes through with next year's numbers, all things being equal, you would expect that reserve capacity payment to increase to the next level again. On top of the reserve capacity payments, there's also the national, so from a federal point of view, the government's announced the reserve capacity investment scheme, which is different from reserve capacity in WA. So that was announced in the last quarter of last year, which is a $67 billion initiative. The government still hasn't actually confirmed what that's going to be or what it's going to look like. My understanding is, and we've been speaking to the federal government about it, is that it's going to be an auction process, which is going to run every 6 months. And it's basically going to be companies that are ready to go to build renewable energy projects. They'll receive effectively an additional credit on top. Again, it's been indicated that WA, because we're different and we're on a different grid, we're going to be somewhat potentially ring-fenced from the rest of Australia, which really puts us in a very strong position, we believe, in getting something. For the simple fact is we've highlighted once or twice, there's not a lot of other renewable energy projects which are going to be able to come onto the market over the next number of years. So I think we're in a very strong position to get that payment at some point in the future. And the federal and state government have both been fully supportive of what we've been doing today.
Adam, thanks for your time today. A very fascinating story and one we'll be watching very closely over the coming weeks and months. Thanks. Have a great weekend.
Excellent. Thanks very much, Paul.